They told you it was a relic. They told you it was a speculative bubble for retail dreamers. But today, the global financial hierarchy has officially collapsed. As of Sunday, December 28, 2025, we have reached a point of no return. In a move that has sent shockwaves from Wall Street to the Forbidden City, silver has done the unthinkable. It has surpassed Apple in total market capitalization, officially ranking as the third largest asset in the world. Think about the magnitude of what that means. A physical metal pulled from the earth has just dethroned the undisputed king of Silicon Valley and the most profitable tech giant in history. This is not just a price rally, it is a fundamental restructuring of what the world considers valuable. If you're watching this right now, you're witnessing the birth of a new era. The era of digital dominance and paper wealth is hitting a brick wall of physical reality. I'm Kevin Huang, and this is Markets in Context. Before we dive into the data that the mainstream media is still struggling to process, you need to subscribe to the channel and hit that notification bell. We are tracking the most violent price discovery event in modern history, and you cannot afford to be behind the curve as the January 1st deadline approaches. Let's look at the raw, undeniable numbers. As we sit here on December 28, silver is trading near $79.11 per troy ounce. Earlier this month, we hit an all-time high of $79.57. This is not just a good year for the metal. Silver has rallied between 150% and 169.63% year to date. To put that in perspective, this is the single best annual performance for the metal since 1979. In just the last month alone, we have seen a staggering gain of 48.09%. On December 26, while the world was distracted by holiday thin liquidity, silver jumped another 9% to hit 78.53. The kill switch that the banks used for decades to suppress this price has not just failed, it has been completely obliterated. But why now? Why did the hierarchy collapse today? It is because the market has finally realized that we are running out of the one substance that makes the modern world possible. The global supply deficit for 2025 is projected between 100 million and 250 million ounces. We are seeing a demand of 1.24 billion ounces colliding with a primary supply of only 1.01 billion. This is not a temporary blip. This is the fifth consecutive year of massive shortfalls. And here is the terrifying reality for the tech giants. 70% of silver production is a byproduct of base metal mining. It is inelastic. You cannot simply turn a dial to dig up more silver just because the price is at $79. Even at these record highs, the mines cannot ramp up production fast enough to meet the hunger of the industrial machine. And that machine is starving. Industrial demand now accounts for 50% to 60% of total silver consumption. Silver's properties are irreplaceable. It is the lifeblood of solar photovoltaic cells, which now devour 20% of global use. It is essential for electric vehicles, high-end electronics, medical devices, and crucially, the artificial intelligence data centers that the world is currently betting its entire future on. There is no substitute for silver's conductivity and durability. As defense spending surges due to conflicts in Ukraine and the Middle East, the military demand for silver and high-precision weaponry is also reaching a breaking point. Now, let's talk about the China kill switch. This is the catalyst that is driving the current parabolic move. China is the world's dominant silver refiner, controlling between 60% and 70% of global capacity. And on January 1st, 2026, just 72 hours from now, they are pulling the plug. New export rules are being implemented that require strict government licenses, an 80-ton production threshold, and $30 million in credit lines. This is not just regulation. It is a strategy to consolidate the world's silver supply within Chinese state firms. Experts estimate this could effectively remove 13% of the global supply from the market overnight. Elon Musk himself has called these developments not good for industrial processes. If the man who runs Tesla, SpaceX, and the world's largest solar roof company is sounding the alarm, you know the crisis is real. In China right now, the panic is already visible. Physical silver reached a staggering $90.25 per ounce on December 27. That is a massive historic premium over the global spot price. The market in Shanghai is in backwardation, meaning the spot price for immediate delivery is significantly higher than the futures price. People are hoarding. They are paying $11 premiums just to get the metal into their hands now because they know that in 3 days, the gates could be locked forever. While the paper price on the COMEX tries to hold the line, the inventories are telling the real story. London vaults have been depleted by 40%, dropping from over 31,000 metric tons in 2022 to just 22,000 tons by March of 2025. COMEX registered stocks are down an incredible 70% since 2020, but the most explosive data point in the entire December 28th report is the paper-to-physical ratio. Following a historic short squeeze in October, this ratio has hit 356 to 1. Think about that math. For every single physical ounce of silver sitting in a registered vault, there are 356 digital claims on it. This is a mathematical certainty for a delivery default. The short sellers are being backed into a corner where they are forced to cover at escalating premiums. This is not just a squeeze, it is a liquidation of the old financial order. The desperation of the system is starting to show. We are seeing unprecedented policy interventions. The CME Group has just hiked margins to a massive $25,000 to try and quell the frenzy ahead of what the markets are calling Silver Thursday. They are trying to stop the parabolic rise, but they are fighting against physics. You cannot print your way out of a physical silver shortage, and as the financial system fractures, the geopolitical landscape is providing a tailwind of pure chaos. President Trump's blockade of Venezuelan oil tankers is heightening the safe haven demand to critical levels. This is not just about oil, it is about a global interventionist system, where physical assets are the only things that cannot be frozen or seized. Contrast this with Bitcoin, which has stalled while silver's physical scarcity appeal has soared. When the ships are being seized and the power grids are at risk, people want the metal in their hands, not a code on a screen. We are entering 2026 in a state of extreme industrial and monetary stress. Even the traditional investment giants are having to move the goalposts. While experts at Bank of America are trying to be conservative with a $56 average and a $65 peak, others are realizing the scale of the mania phase we have entered. CoinCodex is projecting a price of $120.37 by late January 2026, a 52% gain from here. Trading Economics sees $86.71 within 12 months. But the heavyweights, like Maria Smirnova at Sprott Incorporated, are looking at supply dislocations and physical shortages in China and targeting a range of $100 to $200 per ounce. The global hierarchy has collapsed because silver is no longer just a trade. It is a strategic necessity for the survival of the modern technological state. But here is the detail that the mainstream analysts are completely missing. And it is the reason why the industrial world is currently staring into the abyss. The era of thrifting is over. For years, engineers have tried to reduce the amount of silver in solar cells and electric vehicles to save costs. But we have hit a wall of pure physics. Silver is the most conductive element in nature. Alternatives like copper simply do not have the same efficiency and are prone to oxidation, which ruins the lifespan of a multi-million-dollar solar array or an electric vehicle battery system. In a world where energy efficiency is the only thing that matters, you cannot substitute silver without sacrificing performance. This makes the industrial demand anelastic. It means the giants like Tesla, Samsung, and Apple will pay any price just to keep their assembly lines from stopping. This is precisely why Elon Musk's intervention on X today is so critical. When the chief executive officer of the world's most advanced tech company says, "This is not good regarding silver supply," he's not talking about a price hike. He's talking about a systemic failure of the supply chain. Musk's concern has acted as a validation signal for the entire market, triggering algorithmic trading and massive retail inflows. If Tesla is worried about the physical availability of the metal, then every other tech company on the planet is currently in a state of emergency. Tesla's growth in electric vehicles and solar technology is devouring physical silver at a rate that is mathematically unsustainable. While the industrial side is panicking, the financial side is witnessing a total breakdown of trust. Look at the CME Group's actions today. In a desperate attempt to stop the parabolic move and protect the clearinghouses from a total blow-up, they just hiked the initial margins for silver futures to a staggering $25,000 per contract. Their intent is to force out the weak hands, the retail speculators using leverage, but they are fighting a war they have already lost. This is not a paper squeeze driven by Robinhood traders. This is a physical shortage driven by sovereign states and multi-billion-dollar corporations. Margin hikes do not affect the industrial buyer who is paying cash for immediate delivery. If anything, this move by the CME will only reduce liquidity and make the next leg up even more violent. The paper versus physical war has reached a breaking point. The report confirms that the registered stocks at the COMEX, the actual metal available to satisfy contracts, have plummeted 70% since 2020. We are now operating at a ratio where there are 356 paper claims for every single ounce of physical silver in the vaults. This is a statistical impossibility that can only end in one way, a delivery default. The moment a major institution demands their physical metal and the COMEX cannot provide it, the paper price becomes a fiction, and the real price for physical silver will go to the moon. We are already seeing this reality play out in the backwardation of the futures curve. People are so desperate for silver now that they are paying a massive premium over future prices just to get it delivered today. And while the financial plumbing is bursting, the geopolitical map is being redrawn in real time. The assassination of a high-profile official in the heart of Moscow today has elevated the global risk premium to levels we have not seen in decades. When such a high-ranking military official is killed in the Russian capital, the risk of a disproportionate and uncontrollable response skyrockets. This is pushing institutional capital away from digital assets and sovereign debt and toward non-sovereign tangibles. You cannot freeze a silver bar in a vault the way you can freeze a bank account or a digital wallet. In South America, the United States Navy's blockade is actively interdicting the Shadow Fleet. The seizure of the tanker Centuries and Bella One proves that the era of globalized, free-flowing trade is over. We are moving into a world of resource nationalism and sanctioned corridors. This is the perfect storm that the report describes, a convergence of Chinese export bans, United States military aggression, and an insatiable industrial appetite for the white metal. So, where does this end? The psychology of the market has shifted from if to how high. A survey of retail investors shows that 57% now expect silver to smash through $100 an ounce in 2026. But the veterans, the people who remember the Hunt brothers in 1980, are looking at the $300 level. If this turns into a true mania, where the general public begins to panic, buy silver just to protect their purchasing power, we could see a move that mirrors the most explosive periods in history. The relative strength index at 93.86 tells us we are in extreme overbought territory. But technical indicators do not account for a military blockade or a total export ban from the world's dominant refiner. The $79 silver we are seeing today is a signal that the old order is dying. It indicates a total loss of confidence in the ability of central banks to maintain stability. If the dollar continues to be armed through seizures and sanctions, the world will continue to flee into the only assets that cannot be printed: gold and silver. We are witnessing the birth of a multipolar monetary system where resources, not treasury bills, are the true measure of a nation's wealth. Even as the price holds near 79.11, the divergence in China tells us $100 is likely already the true floor. While Western screens show $79, physical silver in Shanghai hit 90.25 on December 27. This is not a sustainable discrepancy. The world's industrial giants face a choice: pay $100 or more now, or stop production in January. If you have not already, you need to ask yourself, do I have enough physical protection for what is coming in 2026? The question is no longer, what is the price? The question is there any left? If you found this breakdown of the December 28th analysis valuable, make sure you like the video and share it with those who are still asleep to this crisis. I'm Kevin Huang, and this is Markets in Context. Subscribe now to stay informed on the front lines of this global squeeze. We will be monitoring the Shanghai Open on Monday very closely. If the premium continues to widen, the $80 floor will be firmly established and the race to 100 will be in full swing. Hold your physical. Protect your family. The system is broken and reality is taking over. I'll see you in the next update.